Ladies and gentlemen, welcome to another episode of Bitcoin Summer. Thank you for joining me today. The leaves are changing and falling. The price of Bitcoin is changing and rising. And we just hit, it's around 9 a.m. on Wednesday, October 20th, and we just hit a new all-time high. Welcome, folks. For those who held their Bitcoin through the summer, who bought at the top, waited, had faith, kept on the train, congratulations, here we are. For those of you who weren't in and saw the dip as a chance to maybe start stacking, congratulations, here we are. And for those who have been in since the beginning or thereabouts, congratulations, here we are. Where are we? 2-3 trillion market cap, folks. This is insanely stellar news. I am over the moon, as you can tell. This is an amazing development. What just happened, I was just about to record. We're at $65,712 per one Bitcoin. And as a lot of people were saying, when we would go past that all-time high, we're now in price discovery, and we're just going to watch this thing rip. Because there's no resistance to where this thing could possibly go. Everyone's in profit now. Everyone who holds Bitcoin is in profit now. This is an amazing moment, and I'm so glad to be sharing this with you all today on the episode. And I got a lot of good stuff in preparation for that. But before I start, I wanted to do a huge thank you to all the people that are sending me tips. There's a couple trickling in here and there, and $1, $2 here and there adds up, and every little bit counts. So I want to thank you all, and it's usually anonymous, so I haven't had a chance to personally thank a lot of you guys out there. So again, thank you so much for sending me some sats. You can do that over Twitter, or you can do that on Strike, and you can find all that information on BitcoinSummerPod.com on our support page, so check that out there. Lots of crazy stuff happened over the weekend. I got a retweet from Preston Pitch. I'm not name dropping, but I need to name drop him because he is the single sole reason why I am in Bitcoin. And I want to thank you, Preston, for giving me a shout out for my newest recent rebalance script YouTube video. And those of you who only listen to the podcast, go check that out on YouTube and subscribe there as well. But I'm over the moon with Preston giving me a shout out and finding some value in what I've done, because I want to help everyone out, but to have somebody that high a caliber and that much of a good thought leader of Bitcoin out there on the forefront giving me a shout out was huge. Last week, when the price was ripping, the show hit 300 subscribers on YouTube, and with Preston's, I went from 300 to 400, and it's just exponentially growing, and it's just fun to watch the viewer count go parabolic with the price of Bitcoin. And I have a lot of people to thank for that, but I just wanted to give a shout out to Preston, and there's some other high-profile people out there liking my work as well. So if you haven't yet, please please subscribe, send me a review, and go to the website and check out all the information there. There's other blog posts and things like that. So please spread the word. I'm slowly being found, but it's a work in progress. And when you start from literally 0 followers, it's hard to build from that base, but it's just fun to watch it grow exponentially now. So what else happened over the weekend? Preston, who I just mentioned, debated Mark Cuban, the famous billionaire owner of the Dallas Mavericks, on the guy from Shark Tank. Preston debated him on Twitter Spaces, so that was an insane thing to watch, to listen to. And, it's just an exciting time when you have somebody like that willing to come out and do a debate with people. And a lot of people said, he was kind of arguing in bad faith, or he was tag teamed and there was too many, Bitcoin maximalists on the other side of the argument, so it wasn't a fair fight. There's a lot of different things being said about it, but all in all, it's a great thing for Bitcoin to get out there into the mainstream. Now we're almost at $66,000. Like I said, when we're in price discovery, this thing, it just doesn't know where to go. And the only place where it can go with such supply constraints on the exchanges, the only place for it to go is up. So that's kind of crazy. So I'm going to play right now. This is what I predicted back this summer. I think I predicted it back in July, or late June. And so let's take a listen to that right now.
We're going to crack new all-time highs by the end of October.
The end of October? What do you mean, like the 4th week of October?
Yeah.
I just wanted to play this to just show you, these price predictions that we make, they're all up in the air. None of us know where this is going. But what I always say here on Bitcoin Summer is, we shouldn't be making trades. We shouldn't be doing any investing based on a short-term time frame and a short-term price prediction. It just doesn't work out for anyone. If I would have made trades or told people to make trades off of me saying that all-time highs would be in August, I'd be a much poorer person in Bitcoin. And this is just not the way I operate. But I do like to have fun on the show, and I do like to make predictions, and I do like to see where this price could go, because if we know the potential of where Bitcoin could go, we could gauge how much we want to place of our personal wealth into Bitcoin, if not all of it, like some people I know. But, we can get to the place where we are confident with our stack, and we know that what we did won't put our family in economic strife. And I talked about that during the last episode as well. And, it all comes together as a risk management thing. And what investing is about is risk management. And I think the greatest hedge against risk is holding Bitcoin. And that's my opinion about it. And I'm trying to spread the word on that. And even just having a 10 or 15% or 20% allocation in your investment portfolio is a great place to start. And once you start learning a little bit more about it, and you take personal stock in it because it is tied in with your portfolio performance. And then you're like, what is this thing? Because it performs like nothing else out there, as we are seeing this year. It's just, everyone was calling for it to be dead. Scott Minerd is still waiting for $20,000 from Guggenheim. I mean, it's just an exciting place to be. And so, but what I did do correctly is I did call, this was a couple weeks ago now, I did call for the Futures ETF to be put out on October 18th, which it was a day late, but it was announced on the 18th. It started trading, it started trading yesterday on the 19th. But it was actually approved on the 18th, or it didn't get struck down by the SEC. And a lot of people were saying it's never going to happen. They're going to loosey this, and they're going to pull the football away at the last second. And it didn't happen. If anyone was paying attention to the show, I explained that Gary Gensler from the SEC, he was really, really, really pumping this idea that we were going to have a futures ETF, or that futures ETF were going to be better than a spot ETF. And I'm going to go into all those reasons later. We're going to basically be doing an ETF coverage episode. And I know a lot of you hate ETFs out there. And I know, I agree that you should have your wealth in actual Bitcoin and not an ETF. But certain institutions, they have to only buy an ETF. They can't keep actual Bitcoin, and we're going to go into those details of why that is later. What I want to quickly talk about before we get into the episode is Bitcoin dominance. And Bitcoin dominance is a hot garbage metric, and it should be taken with a grain of salt for sure. But why I wanted to talk about it is it's getting very interesting as Bitcoin dominance is rising now and taking power over the alt market. And the reason why Bitcoin dominance is a garbage metric is because of the shit coins, because they can issue as many coins as they want. They can put that on the market. They actually have incentive to, because not only do you get unit bias and you can, 0.00002 dollars will get you one Dogecoin or whatever, Shiba Inu or whatever you got out there. And what happens is you create this unit bias, and so people look at the price of Bitcoin and they're like, well, I'm not going to pay $66,000 for a Bitcoin. Yes, it's crazy, but you can get fractional Bitcoin. They're called sats, and that's why we want to make sats the standard, because of this unit bias that we have in the shitcoin market. And people are like, oh, if Shiba Inu goes from 0.0002 to even $1, or eventually someday it goes up to $66,000, this is going to be completely life-changing money. And it is that fiat mindset of high time preference, short time horizons, making money quick, get in, get out. And it's not what we're all about here at Bitcoin Summer. And so I want to put that caveat on it. But it is a metric. It's a metric, So what we're looking at right now is we're dipping from a 40% Bitcoin dominance level. And what that is just literally the share of the cryptocurrency market. So what we did was we bounced from 40% to 50% in short order. Everyone was calling, Ethereum's going to flip Bitcoin, all of this stuff, but they always forget that Bitcoin's the big dog, and it controls the market. And you're not going to get an Ethereum run if you're not going to get a Bitcoin run. It'll happen for a brief period of time, but people are delusional thinking that it's going to flip it. And if it does flip it in market cap, it's because they have more shares outstanding. They have more coins outstanding. So, it's all a trickery of the mind. But my point being is, if you're going to be going on Bitcoin dominance alone, we saw in April, May area, we were around the 70% Bitcoin dominance area. Now we've just hit 50% at right just under $66,000 per Bitcoin. So if we do see a rise again, and we are seeing altcoins, like I call them shitcoins, bleed out, we're seeing them bleed out pretty bad right now. If we see Bitcoin dominance go back up to 60%, we're looking at a price at today's issuance, $83,000 Bitcoin. And that could happen in short order. We went 10% gain in Bitcoin dominance within the last couple weeks. If we see 70% again, we're looking at $97,000 Bitcoin, because the crypto market cap is at $2.6 trillion right now. So as Bitcoin gobbles up those altcoins, and those people that are looking for those short-term gains start shifting their wealth into Bitcoin because they're watching that train take off, what we're going to see is complete FOMO into Bitcoin. Retail hasn't even started yet. If you look at Google searches, buying Bitcoin it's barely even a blip. And you'll see back in April, May, parabolic. We don't have retail yet. This is all institutional buying. And now that we just cracked all-time highs today, I think we're going to start seeing it right now, like literally right now. And altcoins are going to bleed even worse than what they've been doing the last couple weeks. And so I think this is very, very feasible. And it's just so happens it's going to set us right under that $100,000 mark. And I think when FOMO starts really hitting in the retail zone, and not even cryptocurrency zone, but just the general retail investor, this thing's going much past 100,000. And I think that will be within the next couple months. So I'm ultra bullish. This is an amazing time to be alive. I did briefly mention my video. You need to go check it out on rebalancing your channels. I did an ultimate guide, and I do a full section on automating your rebalancing, and that's an amazing piece because, time is money. And if you can save yourself some time from rebalancing, put that thing on autopilot, you're in business, especially if you're doing it at a profit. And so I'm tinkering with mine, and I'm so happy with the results. So go check out my ultimate guide, and because of Preston, I got over 1,000 views on that one, and I'm just very, very, very proud of that. So please give me a subscribe on YouTube, and subscribe to the show on your favorite podcast app as well if you haven't already. And so thank you for joining me today, and now we're going to jump into the episode. We're going to be talking about some ETF business today. I'm sorry for those who hate ETFs. I try to include something for everyone here. It is an investment show, so just bear with me on this one. There's going to be some things that, even if you hate ETFs, that you might want to know or you might want to learn. So hang with me on this one. It's getting a little bit cold out there. Fall is coming. But in here, it's always Bitcoin summer. They price this out of the housing market. They price this out of the education market. They price this out of the stock market. They continue to price this out of day-to-day goods. We need to take this back, and this is our time to do it. Okay, so like I hinted at in the intro, the Bitcoin Futures ETF started trading yesterday. And now the difference between a Futures ETF and a Spot ETF, it's fairly simple, but, the nuances get a little complicated. So a Spot ETF is what I would prefer, and that's where the actual ETF company holds actual Bitcoin. The Futures ETF, they mainly hold futures contracts. And so they're playing off of the futures market and not directly. So they're playing off of derivatives and not directly with spot. And the SEC has said it's for consumer protection, which is a line of bullshit. And the reason why it's bullshit is, just look, for example, at a futures ETF, which completely imploded in 2020. And it was an oil ETF, and it was futures-based. And when oil futures went into backwardation, and that means the futures price dropped below the spot price, the whole market completely destroyed. And it's not spot traded, so you're not giving money for oil. You're giving money for a contract that says you can get oil at the end of this time period. And so there's not that oil to settle. So what happened was the futures market went completely negative, and the ETFs imploded. And I should know because I was holding a little bit. Luckily, not a lot of my stack, but I was playing the card that the oil prices would shoot up after the demand would come back after the first COVID shock. And I was a little too early on that trade. So I'm kicking myself a little bit, but luckily, like I said, it was a long shot trade anyway, and it was one of those trades where I was just looking for a 20x, and I didn't throw a lot into it, but I got burned on that. And so the SEC talks about consumer protection and investor protection, and it's just a line. And why would that be better than having a spot ETF where it's actually backed by that currency? It's actually backed by that thing. It can be settled in that product. It doesn't make any sense to me why that would be better. And you have triple levered ETFs. You have ETFs that use actual margin. They use loans. and they can be called out on that. And they have exploded. There's ETFs that are programmed to debase, literally. And people, will short a position of it just because that's what it's designed to do. There's all these sorts of crazy products out there. And this is just posturing. And I think where we're getting to the point of, I think Gary Gensler is kind of just dragging his feet on it. And, he has talked about, seems like a Bitcoin proponent, and he seems like he gets it. He taught at MIT. He taught a class on cryptocurrency. He taught a class about Bitcoin. He calls it a store of value. But I think there's pressures outside of that in the government because they're going to be wanting to launch the CBDC, which is the central bank digital currency. And eventually, we're all going to be, using digital currency. I mean, basically, our currency is digital right now, but they want it in more of a cryptocurrency form. And they think that's going to completely take over the cryptocurrency market. But it's literally just shitty fiat that they actually will have more control over. And they'll be able to press a button and take your taxes right out of your bank account. And they'll be able to hit a button if you go, walk outside of your house the wrong way. I'm drawing a doomsday picture here, but we do not want CBDCs. We just, we don't want this to turn into 1984. So let's just stay away from that and just opt out. Just come along with me to Bitcoin. So, I don't want to get too bogged down in the technicals here, but Gary Gensler has a preference for the 1940 Act, the 1940 SEC Act, over the 1933 SEC Act, and a pure spot ETF would be under the 1933 Act. And to not to get too complicated, but these companies are having a hard time filing for ETFs. There's like a dozen of them out there that are going for the same thing. There's like a dozen companies that are trying to get this ETF across the finish line. But Gensler is using this 1933 Act as a blockade, and he's saying, it's kind of a cop out. It's kind of just like, this is the reason why we can't do it, but it's not a super good reason. We'll go into that a little bit later. But seemingly Valkyrie now, another company, fund company, they will be launching their Futures ETF. If not today, I think it might be tomorrow. I got to check that out. But their ticker is going to be BTFD, by the dip. That, I love that. I love that name. It's amazing. I mean, it is a Futures ETF. I would never purchase it unless it was way off of its NAV, but terrible product, but the name is amazing, and it's amazing that they got away with that. Really, really funny. And so Bitwise, another fund company, they dropped a spot ETF filing the other day as well, and all of these are coming down on the day that the Futures ETF was launched. It's almost as if the SEC is giving them the green light on this. So we're going to talk about that in just a second. But the Bitwise filing, so they're not going to be filing under the 1940 Act, and it's in defiance of Gensler's, only going to be approving the 1940s Act, which means that you can do a Futures ETF. So they're going to be going under the different ruling, and this is going to bring us to what I wanted to talk about, is the Gbtc conversion. So I've talked about it before. You can go back and check it out in another episode. But briefly, Gbtc is a trust. It's not an ETF. And as it's trading at a discount to NAV right now, and NAV is the actual value per share. So it's net asset value. And it's trading at a discount right now because people are finding these other proxies. It's not just the only proxy. It used to trade at a premium. You used to pay more than what it was worth. But now it's trading at a discount, and they want to close that gap, and they hold more Bitcoin than any holding company. And I'll go into those details as well. But now they just filed to convert to an ETF, to convert their trust into an ETF. This would be huge for them. And it would be huge for people who own GBTC, which is a lot of people. So here it is right here. It's a beefy document. It's a beefy filing. And I went through it, and it's pretty interesting stuff. And the New York Stock Exchange filed it for them. They partnered with the New York Stock Exchange, ARCA. And it's amazing that they have them as a sponsor because, they're really close with the regulators. So in my eyes, I'm just seeing this as all positive for the GBTC conversion. I just don't see it any other way. So let's take a look at this here. On this filing, they call out Gensler's speech in August. And this was at the Aspen Security Forum. They literally call out his speech. And they recall that Gensler actually shouted out GBTC during his speech when he was building up his position on the 1940 Act. But he did hint at, he was like, I'm excited to read, maybe not excited, but, I'm looking forward to reading the filings and reading their arguments on why we should approve a 1940s Act. So there was a hint in there that he dropped, and they mention it in a filing. I mean, a lawyer wrote it up. It's kind of incredible if you think about it. And they also call out that investors are not going to be any more protected under the 1940s Act than they will be under the 1933 Act. The futures market can be manipulated much more than the spot market, especially in Bitcoin, because, Bitcoin you can't fuck with. You can't create more of or destroy. I mean, you can destroy it by forgetting your keys, but please don't do that. So here's the quote here. The sponsor believes that if it is the case that the commission is open to reviewing and potentially approving proposals for Bitcoin-based ETPs, exchange-traded products, registered under the 1940 Act, then it should take a similar view towards proposals for Bitcoin-based ETPs registered under the 33 Act, given that both products would be reliant on Bitcoin's underlying price in spot markets. So what they're drawing, the conclusion here is the futures and the spot are going to rely on the spot price. And I think what they're hinting at to Gensler is the spot price is just more direct. It's actually going to be less manipulation. And I think it's a good argument myself. And I've been chattering about this all summer on the show. And what I was hinting at before was GBTC, or Grayscale, the company that holds GBTC, they started a partnership with Bank of New York Mellon, which is one of the oldest banks in the United States, and they're super tight with regulators, and they were hiring a bunch of ETF experts in the field, and so there was all this really high level hiring going on and these partnerships forming with Bank of New York Mellon. And now that they've partnered with ARCA to do their filing, I mean, to me, it screams that this thing's going to get approved. And I know people disagree with me, but I wanted to go over again. I always, first and foremost, I recommend holding spot Bitcoin above everything else. But if you already possess Roth IRA account, in your Roth IRA accounts, if you already have GBTC, this might be a good opportunity to pick some up at the 20% discount. It's not investment advice, but in my opinion, this gap is going to get filled at some point. And you might be waiting months, maybe a year, but it's a great arbitrage opportunity right now. And like I said, if you have a Roth IRA and you have the potential to buy GBTC, I would say just buy a little bit if you have those accounts and you don't have access to spot Bitcoin. But if you do, buy the spot instead. So full disclosure, I've mentioned this before, but I do own GBTC in my Roth IRA accounts. And I don't have access to spot Bitcoin on those accounts. So what I'm doing right now is I have been buying at that 20% discount through those accounts. And what I'm thinking for myself, and again, not investment advice, and I can't stress this enough, don't do what's good for somebody else. Do what's good for you in your personal situation. But I do like to share with people what I'm doing because I've been successful in the past. Doesn't mean I'm going to be successful in the future, but I do like to share my ideas because I like hearing other people's ideas because that's how we get good ideas. We hear from the people that we trust, that we like to follow. And so what I'm thinking is, to possibly create some sort of an income while we hold our Bitcoin, because obviously we don't want to be putting it on one of those interest exchanges because, you could lose your Bitcoin. A good way to possibly do it is through your Roth IRA account, and you could have a little trading account in there. And a huge part about not wanting to sell, well, basically any of your assets is you're triggering a tax event. And with a Roth IRA account, you're not triggering a taxable event. So what I'm thinking is possibly, and this isn't a large portion of my investment portfolio whatsoever, but possibly it could be a small trading account. Anyways, it got my gears turning that I was like, if I had any other capital in my Roth accounts, I would be dropping it into GBTC right now. But I don't. It's all in GBTC as it stands. So I guess it's a moot point for me, but it might be something to think about. So if the SEC approves this, obviously your GBTC holdings will be converted into an ETF, and that's confirmed by this filing. I had a big question about that before because I was just wondering how that exactly was going to work. Did you have to go in and exchange them for the GBTC? I wasn't clear, but now it's clear. The filing does say your GBTC will be converted into a new ticker, BTC, and that's creating some sort of consternation on the internets because people just don't want the general public to be confused, like, is this actual Bitcoin? It's not. And so, yeah, I kind of agree with that. I mean, it's kind of a little snaky, but, what can we do? And I think, again, with the unit bias, if people see like a $40 per share BTC on their brokerage account, they may be more apt to buy it than a $66,000 Bitcoin. It doesn't make any sense mathematically, but I get it. And if that's a way to get somebody in on that end of it, I think it's a good thing. So I don't think necessarily an ETF is the worst thing in the world, as a lot of people are pointing out. I think it does create this disconnect between the power of actually holding Bitcoin. I do agree with that, but I don't think that it's a bad thing for the ecosystem. So we can debate all day. It's just who knows who's right. I don't know. Anyways, this is Michael Sonenshine. He's the CEO of Grayscale, and this is his announcement here. So I think many people in the space think it's a no-brainer due to the sheer size of the fund that they're going to convert GBTC into BTC. Now, Grayscale has gone from, as you can see here, from a little tiny shop of 60 million assets under management, AUM. When you see AUM, that's assets under management. From 60 million to $53 billion assets under management. And so a lot of people think for the sole reason that they're such a big entity and that they have gotten into bed with regulators, people think it's a shoo-in for an approval by the SEC. Others think it's going to be a belly flop. You know, Gary Gensler, like I said before, he's against the 1933 Act, which you would have to file for a spot ETF under the 1933 Act. So at the very least, the skeptics think this is going to drag out for years. The skeptics think that the Gbtc conversion is just, it's going to, Lucy with the football, just going to keep pulling that away. But I tend to disagree with this view. And I'll go through why, but this is going to be very interesting to watch play out. And I got my popcorn ready for it. So why I actually think it's going to be accepted by the deadline, which is 75 days. The SEC has 75 days to approve or disapprove this, or not to say anything like they did with the futures product. And I think it's going to be not only converted, I think it'll start trading within 3 months. I could be very, very wrong about that, but that's just my impression, and this is why. So they have $40.5 billion worth of Bitcoin. It's almost 635,000 actual Bitcoin in their possession. So in my opinion, no matter what, this will be the first ETF that is approved. Not these other dozen or dozen and a half or whatever it is. I believe this one is going to be the one that's approved. So when will that be? We don't know. But in my opinion, the facts are pointing to it's going to be Gbtc that's going to be converted first, and then the others will follow. The SEC, yes, they're shady and they're aligned with Wall Street, but they're not going to want to shit can the retirement accounts and brokerage accounts for 700,000 plus, retail and institutional investors, especially the institutional ones who have to buy Gbtc because it's in their charter. They can't own actual Bitcoin. So the SEC is not going to want to implode that. And people can think whatever they want about the SEC, but they are shady, but they're not going to shoot themselves in the foot, in my opinion. Maybe they will. Maybe I'm completely dead wrong about that, but we'll see. I just don't think it's politically viable. And they work hand in glove with the institutions, so I don't see Gbtc not getting approved first. That's just my opinion about it. So here's the Bitcoin Magazine article. So yeah, we are now under the 75-day review period, and we're just going to watch this play out. So 75 days from when this was filed is going to bring us around January 3rd. And a lot of chartists and analysts are, finding evidence that the bull market's going to start finding some weakness around that time, or, start to begin to taper off a little bit. Or if we're going to have this parabolic run, it's going to, around January, we might see some wavering a little bit. But this catalyst, if this happens, it could give Bitcoin another leg up. I honestly believe that. A dampened and exhausted market needs a catalyst. And if you have retail starting to lose a little bit of faith that this is going to go to 200 or 300,000, well, a Bitcoin ETF spot approval could possibly change that. If FOMO hasn't been found by then, it definitely would be found at that point. And I've been pounding the table on this since this podcast began. We don't want to admit it, but the catalysts are good for the price of Bitcoin. If you don't want the price to go up, then yeah, you can be against these catalysts. You can pound the table and say, hey, we don't need an ETF. That's fine. But you can't deny that it's good for the price of Bitcoin. That's just the facts. Now, the reason why I wanted to pull up this article, there's this peculiar line in here. And this is probably my biggest reason for thinking that Gbtc is going to be converted to an ETF a spot ETF. Besides all of the other speculation that I have and all the other reasons, this seems like clear as day to me. So let me know what you think about it. But let me read it here. The investment firm had intended to file its application to the SEC as soon as the agency allowed efforts by competitors for a futures-based Bitcoin ETF. That happened late Friday. We have about a dozen spot ETFs sitting on SEC's desk right now. And the fund, most likely to gain approval, hasn't even filed to convert yet. Or hadn't at this point. I mean, why is that? Why hadn't Grayscale filed? I mean, how often do you hear competitors in a highly competitive field, especially in the ETF world, how often do they allow their rivals to step in front of them in line? Now, this is pure conjecture. Take it with a grain of salt. Gary Gensler has been pounding the table on only allowing the Bitcoin futures ETF for months, so this could all be just a completely, pipe dream for me. But literally the day the futures ETF drops, Grayscale suddenly finds their cojones and they find their spine and they file to convert? That's a little too coincidental for me. My opinion about it is I'm thinking Gensler, he wanted the Grayscale spot conversion all along. I think he needed I think he needed to throw Wall Street a bone first. I think they got into his ear. And so he unlocked the knuckle dragging product first. The one that's going to hurt the retail investors. It's not going to help. And now that the Wall Street beaks are wet, they got their taste. Grayscale can convert for the scraps. I think this one is good for Bitcoin, as I have mentioned. I mean, especially the companies who have a mandate, so they can't own an intangible like Bitcoin, in their charters. But wrapped up in an SEC-approved little package like this, they're going to buy hand over fist. And the demand is out there, as we've even seen with the reaction to just a futures ETF, which has a horrible 12 to 15% drag on the actual NAV, on the actual Bitcoin underlying. As it says right here, the approval of a Bitcoin ETF product enables a more competitive landscape and also unlocks new pools of capital from different pockets of traditional financial institutions that were previously facing too many hurdles to get Bitcoin exposure. So, as I mentioned before, too, with the unit bias and everything like that, I think this is just a win for retail investors that are a little bit too worried about holding actual Bitcoin right now. But again, if you're out there and you're watching this and you're new to the game and you're just trying to find out what's going on, please, please, please watch my videos, watch BTC sessions, listen to Preston's podcast, the Investors Podcast, and please, please, please do the homework first and own actual Bitcoin. But again, if you have a retirement account or a traditional IRA and you can't get access to Bitcoin spot in those, perhaps you want to take advantage of this Gbtc discount right now. So I've read through a couple of these 19B4 filings, and this Gbtc one, they make a very good argument. It's the best written one that I've read, and I haven't gone through all of them, but it seems like the most put together. It seems like they were coached very well by these experts that they hired. And that's just my prediction. And we're all wrong at some point or another. But I've put the facts together here for you. You can, and with a little bit of my bias and a little bit of my spin on it, you can take that for what it's worth and make your own decisions about your future and your family's future. So, without any further ado, I'm going to say goodbye. We are approaching $67,000 per Bitcoin, $66,800 right now, as we are sitting here on October 20th, 2021, and the next 3 months are going to be wild. So, fasten your safety belts, grab that popcorn, and enjoy the summer.